This is Al Brooks, and this is my price action trading course. The module has to do with final flags. Again, I'm going through the list of common reversal patterns, and this module has to do with final flags and other types of failed breakouts and climaxes. Final flag. After a trend reverses, you can look back and find the last flag in the trend, the final flag. For example, the last bull flag in a bull trend before the market reverses into a bear trend is the final flag. Even small trends, even a small leg in a trading range, can end with a final flag reversal. There can be a small final flag, a breakout, and then a failed breakout and a reversal. So what are the characteristics that a flag has that makes traders wonder if it's the last flag in the trend? If you are aware of those features, then you'll look for the breakout of the flag to fail and for the market to reverse. The final flag in a trend has characteristics like these. The flag is often sideways, like a trading range, often a triangle. Because it's sideways, it has two-sided trading and it has magnetic pull, and that means that the risk of a failed breakout is greater. Remember, most trading range breakouts fail and get pulled back into the range. Final flags are easiest to spot when they come in the form of a trading range late in a trend. So if a trend goes on for 30, 40, 50 bars and then it develops a trading range, that trading range might be the final flag in the trend, and the breakout of that range might fail and lead to a reversal and then a substantial pullback or a substantial correction. A common situation, for example, a final flag in a bull trend. You have a bull trend that's going on for a long time, and then it forms a high 2 buy setup or a triangle just below some resistance level, and that flag often becomes the last flag in the bull trend. So when you see that, when you see a horizontal flag occurring just below resistance late in a trend, you have to be ready for the breakout to fail and for the market to create a reversal down, and it's often a very good short. Final flag in a bear. You have a protracted bear trend that goes on for 30 or more bars, and then it forms a horizontal correction like a low 2 short or a triangle just above a support level, and you have to suspect that the market may plunge down to the support level and then reverse up and start a correction, a large two-legged 10 bar or more correction, enough of a correction for a swing trade on the long side. Again, you're looking for a flag that forms close to support in a bear. So you have a bear trend, a flag right above support. The market breaks to the downside, look for the reversal up. And in a bull trend, a flag that forms right below resistance, the market will often break out of the flag, hit the resistance level, and then reverse down. The breakout from the flag might get vacuumed up to the target, the support or the resistance. The breakout then fails and the market then reverses. Final flag can be small or it can be very large. It can be a one bar pullback. You can have a 1 bar final flag. You can have a very big final flag. It can be 50 sideways bars in an extremely tight trading range. It can be a triangle or any other kind of a pullback or trading range. And the reversal itself can be a major trend reversal. So sometimes final flags break the trend line, test the moving average, and then the breakout and reversal create a major trend reversal. You need both context and a signal bar. Context indicates that a reversal is reasonable, and a signal bar has to be strong enough to fit the context, and you manage it like any other trade. The initial stop is beyond the signal bar, and the minimum reward is twice the risk. Here we have two types of support at the same price level. We have a leg 1 equals leg 2 measured move down. We have a sell-off, a trading range, and then a resumption, and the leg down fell exactly the same number of ticks as did the first leg. So it's a perfect measured move, leg 1 equals leg 2, and it's also at the bottom of a trend channel line. So we have two types of support here. So this horizontal trading range might end up being the final flag in the bear trend. And you could also argue that this bear inside bar might be a 1 bar final flag. Here we have a sell climax after an earlier sell climax, and we have a pretty good bull inside bar closing near its high tick. So and this is also an expanding triangle. We went down, up, and down. So we have several factors making traders believe that this could be the final flag of the bear trend. You know, final flag here, 1 bar final flag here. Expanding triangle, always treat it like a major trend reversal. There's a bear trend, a trend line break, and a lower low major trend reversal. And then here we have a higher low major trend reversal. So here's that same chart, horizontal trading range. There's a triangle within it and a potential 1 bar final flag as well. So this could be the final flag, and this as well could be the final flag. Markets often come back to test around the apex of a triangle after a breakout. So here we have a bear breakout, and the market came back to test around the apex of the triangle. There's enough room up there for a swing trade where the profit potential was at least twice as big as the risk. If you buy 1 tick above the signal bar, your stop is 1 tick below. The market went up more than twice that amount. Here's a potential final flag in a bull trend leading to a reversal. Now we have a bear trend, a gap down, and more bear trend, and now we have a horizontal trading range late in a bear trend. The bear trend's going on for about 40 bars or so, and did not quite get to the moving average, but it lasted about 15 bars, and that's enough buying pressure so that the next leg down might fail. And here we have a bull reversal bar. So this became the final flag. Here's a buy signal. Here's a pullback from this breakout. We have a small breakout here, a pullback, so a second entry, and now we have a higher low major trend reversal. So we have a bear trend, a trend line break, test near the moving average, lower low major trend reversal, a rally, and now a higher low major trend reversal. Each of these are reasonable buy setups for swing trades. And at the top we have a higher high major trend reversal and a final flag reversal. Final flag, a breakout, and it's a higher high major trend reversal, followed by a lower high major trend reversal. Final flags, when they break out, they do not have to go to a new high. So for example, we have a bull trend, a second leg up in the bull trend, and we have a lot of selling pressure in here sideways, and we broke out, and then we had a bear inside bar, and it led to a bear breakout. So this was the final flag in the bull trend. The breakout did not go to a new high, so we have a lower high reversal from the final flag. So final flag breakouts do not have to lead to a new high in a bull trend. Here we have a very strong bull trend channel, and then a very tight trading range occurring after the market had rallied 30-40 bars or so. So you have to suspect that it could be the final flag in the bull trend. Also, most trading range breakouts fail, and especially tight trading range breakouts. So chances are the bull breakout from this tight trading range will fail. So traders can short this as a final flag reversal. Here's a better setup because here we have a bear bar and then a second bear bar. So shorting one of these is also a reasonable short for a final flag reversal. It's also a higher high major trend reversal. We have a bull trend. You can draw a trend line across like this. The market broke through the bull channel and below the bull trend line by going sideways, and it touched the moving average. And now we have a higher high, and now we have a lower high. So we have a higher high major trend reversal and a lower high major trend reversal. Final flags can also be very small. For example, we have a bull trend and a 2 or 3 bar pullback, and it would turn out to be the final flag of the bull trend. Here we have a gap down and a little bit of a bear trend, and this little sideways price action became the final flag of the bear trend. We have a rally up. This could be a final flag. Now we're up near resistance, yesterday's high. This 1 bar pullback might be the final bull flag of the bull trend, and it was. Here's a trading range now, and we're near the bottom, near this bottom of the channel up. And this little II pattern, inside bar, followed by an even smaller inside bar, it might be the final flag of this bear trend, and it was. And again, a bull flag near the top of the trading range, it was the final flag in the rally. Coming down, this little bull bar became the final flag in this sell-off, leading to a reversal up after a spike and then consecutive sell climaxes. Again, small final flags. Here's a 5-bar tight trading range, a bear breakout that immediately reversed up into a strong bull bar, and this was the final flag in this bear trend. We have a small bull leg in either a trend or a trading range. These 2 bars became the final flag that led to a reversal down to a lower low major trend reversal. Sometimes you can have a very big bear trend like this, and then a small final flag being the last flag in the bear trend. You can argue that this is the final flag, but when we have a new spike down like this, I would start the process over. And this is a very big sell climax occurring after a trend has gone on for a long time. So you have to suspect that it might be a climactic end of the trend, especially since it's down to a support level. Small trading ranges in trends often become the middle of the trend, leading to a measured move down, and that was the case here. So we have a bear leg starting here, and then a trading range, and then another leg. Here's the measured move down. So we're in a support area, and we have consecutive sell climaxes, and we have a 1-bar potential final flag. We have a small 5-bar lower low that occurred in 2 legs. A lot of times the lower low comes in the form of 2 or 3 legs. And then we have a bull signal bar, a bull inside bar. So that's a reasonable buy for, at a minimum, a test of the moving average. Usually, whenever you have consecutive sell climaxes, the market tries to test at least 1 tick above the top of the sell climax. It did not quite reach there today, but it might reach there tomorrow. An II final flag, if you have a bar that's inside the prior bar, and then the bar after it is inside the first inside bar, then you have 2 consecutive inside bars. That's an II pattern, and it's a breakout mode setup. The market can break out in either direction and run in either direction. When you have an II occurring late in a trend, it often becomes the final flag in the trend. So for example, here we have a very strong bull spike, and we have 3 consecutive inside bars. So this is a breakout mode pattern, and it might end up being the final flag in the bull. It broke to the upside and then tried to reverse down. The reversal led to a bull flag, but it was still the final flag in this bull leg. Here we have a bear trend, a pretty significant bear trend, and then we have 2 doji bars, the first one being inside this bar, and then the second one being inside the first. So it's an II pattern, potential final flag. The market broke to the downside and immediately reversed up, and it had a bull reversal bar. So it's a reasonable long 1 tick above the high of this bull bar. Consecutive buy climaxes. Remember, every trend bar is a buy climax. Every series of trend bars is a buy climax. So each of these green boxes is a buy climax. And now we've had a series of 4 consecutive buy climaxes, and the market is going sideways. So after an overextended bull, now we have a tight trading range, a relatively tight trading range. I did not draw the trend line in, but you could draw a bull trend line here. This broke below the bull trend line and went sideways for 15 bars. That's a lot of selling pressure. It hit the moving average. This is a potential final flag. So traders will watch the breakout from this flag and see if it then has a reversal setup. So we have the good context, but the bears need to have a good signal bar as well. And here's the breakout. It went probably further than what traders wanted, but after this extreme buying and then more extreme buying here and more extreme buying here, it's a reversal bar, even though it has a bull body. Remember, if the bar has a close below the midpoint, it's a reversal bar. To me, this is a reasonable short for a swing down. At a minimum, we should get to the bottom of this bull spike. Probably will come all the way back into the final flag, because that's what usually happens. And after such extreme buying, you'd expect at least 10 bars, 2 legs down. Since the pattern lasted so many bars, 50, 60, 70 bars, I think you'll probably get more than 10 bars down, and you'll probably come back all the way here. So this is a reasonable good sell setup. Again, this is a high 2 buy, 2 legs down, 1 leg here and a second leg here, and high 2 buys late in overdone bull trends, especially after a series of consecutive buy climaxes, very often become final flags, the last flag of the bull trend. You can also argue that this is the final flag as well. I did not draw it, but this is also a very tight wedge. If you take this push up, and this push up, you could draw a trend channel line above, and this tail broke above that trend channel line, and then the market reversed down. Here you can see the trend channel line, a slight poke above the top of the bull channel, and a reversal down. So you can either short below that bar, or if you want, you can short below a bear bar, especially one that closes on its low tick. At this point, after the market has had 5 or 6 consecutive bear bars, the market's probably always in short, and there should be sellers above. If you take that short below that bear bar, your stop is 1 tick above the high of the bar. You want a minimum target at 2 times the risk, and that's this red line here. So from the entry price to the stop, 1 tick above the bar, twice that distance is here, so you might take half off here, especially since it's at the moving average. And I said that there are probably sellers above after 5 or 6 consecutive bars down after a buy climax, and there were. The market traded down here, and again, the final flag here, maybe a smaller one here, and you should get at least 2 legs down and probably more than 10 bars. You'd expect 20, 30, 40 bars after such an overextended bull trend. So first leg down here, lower high, so a lower high major trend reversal. Second leg down, not a particularly good buy. You can argue it's a high 2 buy, 2 legs down, 1, 2, but I think the market's always in short, and we have a lot of selling going on here, so I would not be eager to buy. We're near the top of the channel, the developing channel. You can start drawing trend lines. You can draw a parallel, take this line and put a parallel up here at the high, or you can simply draw a line from this high across these high, and we're testing the top of it, so traders will look for shorts here for another leg down. Final profits on these shorts. This is late in the day, and we've had 3 pushes down, 1, 2, 3. It's reasonable to take final profits above this bull bar after the 3rd push down. You trail the stops. Every time the market makes a new low, you lower the stop to the most recent lower high. The market comes down here. If you're going to hold, you'd lower the stop from this high to just above that high. Again, I talk about this in the modules on protective stops and on trading in bear channels. That's the end of the module on final flags.